A gold price reset is on the table, it's in the cards, and it could happen in the next 3 years. Now, why do I say 3 years? I'll explain that later in the video, but first, what is a gold price reset? Well, that is when a government, in this case the US government, is going to revalue gold at a higher price and devalue their own currency, the US dollar. I actually have some articles and a research paper written by a Trump economic advisor, Stephen Miran, that is going to explain this and outlines why this could happen. And it means the price of gold is going to go a lot higher if this happens. So stick around. We've got a very interesting video coming up. So first of all, there is a precedent for this happening. Back in 1973, the US revalued gold from $35 an ounce to $42 an ounce. In fact, you've seen the headlines about the gold at Fort Knox. It's actually held at Fort Knox and at West Point, but that gold is valued on the books at $42 an ounce. So even just marking to market that gold would increase the US balance sheet of gold, which is an overall good thing. So like I said, a reset has happened in the past. And when that happened, gold went from $42 an ounce in 1973 to $850 an ounce by 1980.
Wow.
Almost a 2,000% return in just 7 years. Incredible. So if you're looking at the $3,000 price of gold now and thinking it's too expensive, thinking you're buying at the top, think back to 5 years ago when gold was $2,000 an ounce. And I was making that same, speculation that I'd bought gold too high. Yeah, it dropped later. And we've had these kind of 5 years where gold's been stagnant. And of course, there were other investments, better investments, and there are always going to be better investments, no matter what you do. Even if you buy, Nvidia or Bitcoin, there are always going to be investments that outperform your own. But is gold really an investment? I don't think of it that way right now. It's really security, it's durability. And if your thesis on why you own gold has not changed, then $3,000 an ounce is still very cheap. Look, have central banks stopped manipulating interest rates? Has the expansion of the money and credit supply, otherwise known as money printing, has that ceased? Are we no longer borrowing trillions of dollars of debt? No, none of the above has changed. So that doesn't change your thesis on gold. And if you look at $3,000 an ounce and you think about, this potential for a price reset, and you look at historical charts from the 70s when gold was first reset, it's really, it's not there at all where it could be. So let's get into some of the headlines and talk about why there's so much inflow of gold into the United States and what that means. And we'll get back to that economic plan from Stephen Miran. So first headline. So let's look at gold ETF flows by region. And you see, back in 2023, no one wanted to buy the gold ETFs. And then right around 2024, more and more Americans and Asians were buying gold ETFs. There was, an outflow of the ETFs in November, probably right after the election. Europe especially, people dumped gold. But then in February, a huge demand in America for gold ETFs. And personally, I don't think ETFs are the right way to invest in gold, unless maybe you're getting the allocated ones from Sprott. But even so, it shows you that there's a strong demand for gold, especially as the price has risen, and especially in America. Now, other charts that are interesting: regional, country, and individual fund breakdown. Asia, the demand's gone up 12%. North America, 7.5%. Europe, 4.2%. Just year to date. So these are incredible demands. But also in the headlines, JP Morgan plans $4 billion gold delivery. So they're delivering against futures contracts in New York. And this is people actually settling futures contracts. Rarely do people do that, but this time people want to take physical demand or physical delivery of their gold. Next headline: Swiss January gold exports to the US reach highest for 13 years. This was in February of this year. Okay. And finally, massive COMEX deliveries since Thanksgiving. Again, more demand for physical gold in the US. People want to get their hands on it, but it's not really people. It's the larger institutions. And that's when we're going to get into, okay, what does this price reset really look like and why is it happening? So credit Matt Smith from Doug Casey's Take for kind of discovering this. But this paper, A User's Guide to Restructuring the Global Trading System, was written by Stephen Miran, who is the chair of Council of Economic Advisors of the United States. So top Trump advisor on economic policy. And he wrote this paper in November of 2024, published it in November 24. And here's what he says. The root of economic imbalances lies in persistent dollar overvaluation. So pause there. He's saying that the dollar is overvalued. That prevents the balancing of international trade. As you know, the United States runs a huge trade deficit. We import so much and export so little. And this overvaluation is driven by inelastic demand for reserve assets. It becomes increasingly burdensome for the United States to finance position of reserve assets and the defense umbrella, as the manufacturing and tradable sectors bear the brunt of the costs. So what has Trump and his administration and advisors been talking about? They want manufacturing to come back to the United States. They want to do trade with other countries. Even though they have put on tariffs, they do want us to sell goods to other countries. They don't just want us exporting our dollars in debt. They want to rebuild the economy through manufacturing. And how do you get other countries to want to buy our goods? You make them cheaper. How do you make them cheaper? With a weaker currency. So he's talking about currency adjustments. And then where is it? Currency policy aimed at correcting the undervaluation of other nations' currencies. Remember how Trump has called China a currency manipulator. Brings an entirely different set of trade-offs and potential implications. While many analysts believe there are no tools available to unilaterally address currency misvaluation, that is not true. I describe some of the potential avenues for both multilateral and unilateral currency adjustment strategies, as well as means of mitigating unwanted side effects. So we can get into, should governments really be manipulating their own currency, or should we let the free markets decide what the value of a currency is? But what I think this paper is saying, although it doesn't mention gold specifically, is that there's a plan that is in place, and it's going to happen in the next 3 years because Trump's only in power for the next 3.5 years or so. But there's a plan in place to devalue the dollar, but at the same time, do it in a way that revalues gold higher. That way, it's not a lose-lose scenario. So we, in the simplest terms, buy a bunch of gold, price it higher in dollars so that dollars are weaker. And remember, that would weaken all currencies as well because China holds a lot of gold too. But devalue the dollar, our gold values go up. And with a weaker dollar, hopefully we get more orders from other countries to buy our manufactured goods. And that's where the explosion of the gold price could really happen if this reset happens. Remember, the 1970s, it went from $42 to $850 an ounce in just 7 years. Gold's moved up about 50% in the last year or so. That's nothing compared to what it did in the 70s and what it did at the start of this century when it went from about $250 an ounce to, in 2020, $2,000 an ounce. So yes, it's kind of a wild theory when you think about it, a country devaluing its own currency, but China's done it before. That's why they've become such a massive player in the markets, not just because they have this large population and all these factories. The factories wouldn't exist if there wasn't a demand for those goods, and the goods are very cheap. That's why people want them. So that's what the administration right now wants from the United States, is to have a weaker currency, stronger manufacturing sector, and with all this importation of gold, they want the value of our real assets to go up. Are you holding enough gold right now? That's the question. Are you prepared for this reset? So my question to you is this reset real? Is it going to happen? Is that what all this gold inflow is about? Or is it just the price of gold moving up? Tell me what you think. Leave a comment down below. Like and subscribe so you can get more news and information about this topic of gold price reset. Thank you.